Digital marketing seems to be the mystery that most entrepreneurs struggle with, and real estate investors are no exception. The truth is, there are multiple avenues to success. Those experiences will be best shared by the guests on this podcast. My name is Jason Wright, and I would like to welcome you to Real Estate Investor Marketing Stories. What is going on? Jason Wright here. Welcome back to episode number 6. So I've got an interesting topic I'm going to just kind of talk to myself about right now. It's something I revisit occasionally in business, right? It's never like planned. It's not like a quarterly or a yearly reflection. It's just kind of based on circumstance. But it's the idea of competition versus collaboration. What's better for you? What's better for business? Should you compete with everybody? Should you partner with everybody? Should you do a little bit of both? The younger, less experienced Jason Wright would have been like, screw everybody, everybody's competition. Because I'm not really a partner guy. It's not really in my DNA. A lot of people have opinions on that, and it's fine. You got to do what works for you, right? I'm not really a partner guy, but I have found that if you have aligned values and aligned goals, collaborations can make sense. You know, in my world, as long as the skill sets don't overlap and they complement, I think there's some value there. I definitely like to meet people face to face if possible and look them in the eyes and figure out who I'm dealing with. That helps, but there is also something to be said about competition. Competition is obviously healthy. More choices in a market can be a good thing, right? Especially if you're operating at a high level, doing things well. So my thoughts on that have changed over time. It's kind of an interesting thing to think about. I think with collaboration, another key, and this is just general business talk, right? This isn't specific to marketing or anything per se, but just kind of random thoughts from me. It's what you get at the beginning of the podcast episodes that haven't caught on by now. But I think as long as there's something in it for each party, right? Because one thing that frustrates me is I have a lot of people that'll reach out to me, want to partner for like the digital marketing stuff, but truth be told, they have nothing to bring to the equation. So I look at it as another cost, another use of my time with nothing in it in return, so I don't do it. And you have to be that way. You have to get selfish on your time when there's a huge demand for it. So just some interesting things for you to think about and reflect on as you go through your day. All right, this week I talked to another awesome guest. You'll hear me say that a lot because people who aren't awesome are not welcome on the show. Just kidding. But I'll be talking to Stewart Heath this week. And again, I've had the opportunity to work with Stewart and meet him and break bread with him. We may or may not have shared not the same plate, but we may or may not have shared a wonderful meal in Louisville together this year. We weren't cutting off the same piece of meat, but we had a good dinner together. Good dude, funny guy. He's the CEO of Harvard Grace Capital. He is also a CPA. He's got a lot of experience in the real estate game. He really does. A lot of experience in life. Good dude, quick-witted, good sense of humor, but interesting dude. And I think we had a great conversation. I think he enjoyed it as well. But without me talking about it anymore, let's get into it. Let's see. Hey, Stewart, welcome to the show, man. Glad to have you here.
Thank you, Jason. Really appreciate it.
Yeah, absolutely. So I would love to hear this because I do not know this story, but I'm sure it's going to be a good one. But tell me how you got started down the road with real estate investing. What was that like?
It was a bumpy road. I like to say I've never learned anything except through the hard way.
Mm-hmm.
By trying it myself, and only in my later years have I learned to learn from other people. And so I'm a CPA. I've been practicing since 1985, and on and off. I started out my career with Pricewaterhouse, now PricewaterhouseCoopers, one of the what back then it was the big 8 firms. So I started out in Nashville, and what an education public accounting can be for all types of businesses. But I realized pretty quickly, I don't like working for other people. And and began to look around at other things. And so I left Pricewaterhouse after 4 years and started my own accounting firm, just to be able to have the freedom with integrity of looking around what I want to do with and not doing it on my employer's dime. And so I knew my public accounting career was really supposed to be a step to something else. So from there started many other entrepreneurial type ventures, some of which are still in business, most of them not. But my observation was my clients that I had that were in real estate. So I had several people who were just real estate agents, go-getters and hustlers who started flipping houses. The next thing you know, they owned a 40-unit multifamily building. And well, how did you do that? It took about 20 flips, to be able to end up with that one. And so I realized several things about real estate. One, that I liked it a lot. It's an easy thing to get into when you don't have a lot of capital, because you can leverage, 80% of the purchase price, usually, which means you don't have as much that you have to come up with out of pocket. And you can do it passively, or you can do it, actively. You can do a redevelopment. And I just loved it. I like to say I love the dirt. And so really one evening, sitting in my house at about 2 a.m., it was the middle of tax season. I am just, pulling on what left of my hair I had left. And I'm sitting there and I'm watching an infomercial from Carlton Sheets. Now, you may not remember him. You're a lot younger than I am, but he was one of the first infomercials I remember seeing. But he sold this program called No Money Down. And it was a way to how to get into real estate investing. I got cynicism from my father, and it's like, what a scam. But I've been watching this guy for 10 years.
Yeah.
10 years, and so I'm sitting there and I'm watching it. Hey, it's a money back guarantee. It's $199. So I bought the program, because nothing could be worse than another 25 years of tax season, anyway, we won't go down that road. But anyway, I got into it. And of course, I'm very familiar with business principles and contracts and stuff like that. And it was just really cool nuts and bolts kind of stuff. And my biggest takeaway from Carlton Sheets was one of his rules was, if you're not embarrassed by your first offer, then you're offering too much. And so, well, that fits my personality. And so I went out and started making really embarrassing offers. Yeah. and I got my first deal. I got a duplex in the heart of Franklin, Tennessee. It was in the middle of the hood, but I had that thing 12, 15 years, and it was just a good, solid little property. Mm-hmm. I bought it for $60,000, and the seller talked the seller into taking back a mortgage for $55,000. So up down in $5,000, and I was in the real estate business. 9 months after that, I bought a group of duplexes up in north side of Nashville. A guy had 14 duplexes all in a row. We did some creative financing. The seller took back a little bit. I think that was $1.2 million purchase, and I think he took back $200,000. Not really sure about my numbers on that. And we did the rest of it with a bridge loan, followed immediately by individual mortgages, because back then you could refi Fannie Mae mortgages without any seasoning requirements whatsoever. So, and then I was like, gosh, I've got 28 units. So what am I going to do now? So along the way, I purchased a property management company and grew that into a brokerage company. I also had invested with partners in a home construction company about 2004. And so we're blowing and going, and we're developing office condos, and I'm rehabbing condominiums. My next bigger deal was I bought a 72 unit condominium in Nashville, one at a time. So I started out by buying one guy's group of 15, and then I just started buying them one by one until I owned the whole thing. About the time I got finished with that, it was late 2006. We started renovating the entire thing, and we did one whole building. We did a grand opening and they were beautiful. I'm still proud of what we did, but by the time we did the grand opening, it was early 2007. And I had, I had 26 units available. That first weekend, I sold 28 units.
Oh boy.
Yeah. I'll be out of this thing by June 30. And all of those closed, but I didn't sell another unit for another 18 months.
Wow.
So then I started, well, let me do what I know. I started trying to rent them. And so long story short, I went through all of that and ended up giving everything back to the banks in 2008, 2009, and went completely upside down, because all of this I had done with very little of my own money, no investor money, really no equity at all. Wow. Banks had been all too willing. And I'll buy this one, I'll hold it for a year or 6 months. We reappraise, I pull equity out, go buy something else, and all that worked until the merry-go-round stopped. So which really happened in the summer of 2008. So that's how I got started, but it never ever removed my interest and love of real estate investing.
As you and I have, as you know, had a dinner together, and I didn't know any of that about you, which is really interesting, all the different businesses. But to go through that and then to come back up out of it, that really shows the world of kind of the entrepreneur you are. You start at the bottom, go up, go back down, and start climbing again. Because what other choice is there? So it's beautiful, man. I love it. So
thank you.
Yeah, no problem. So looking at like Harvard Grace today, are there any specific asset classes and or markets that you really focus on? And if so, why?
Well, it's interesting. As I was mentioning in the pre-show, we just had a board meeting for Harvard Grace Capital this week, and we had a great debate over, all right, what's the future? And we do this at least once a year. What are we going to do? I'm the leader of Harvard Grace, so it's been my vision, but I invite people to come around and just, no one person can see everything.
Yeah.
And our vision continues to stay a geographic focus. And I think where we settled is we're going to add some additional geographies, but we're going to stay very opportunistic on asset classes.
Nice.
We love multifamily. Yeah, but we conclude that it's still a little overpriced, because I've yet to see a multifamily deal that will cash flow from day one.
Yeah.
So the other thing we are going to do, we're going to start looking at more value add opportunities and perhaps some outright development deals, because a Harvard Grace deal is a growing cash flow deal from day one. Those are getting pretty hard to find right now, especially with interest rates. Along with the sellers who haven't quite accepted that cap rates got to go up because of the interest rates. So it's getting pretty difficult to find unless we go do a value add, which we have done. We've done those before. They're very time consuming. So we still like office, and kind of like what we heard at Raise Fest, suburban office / retail. Those are very similar product types, which was our first deal that we did in Spring Hill, Tennessee. And just in really 12 months, we renewed a bunch of leases and improved the average rate per square foot, $4
nice.
A foot per year. We've just closed a self-storage deal. We love, it wouldn't take much for me to decide that's all I ever did the rest of my life. But but I'm a little too opportunistic to paint myself into that corner. So we are actually looking at some multifamily right now, but I'm not confident in it. But anything commercial, I'm not a big fan of build to rent, because I see myself as more of a long-term hold guy, and my fear for build to rent is that the big guys, the big institutionals, the Black Rocks and whatever, a single family house is perfect for about 10 years.
Yeah.
And that's when things start to go. I think they'll just dump them on the market, and that will put a 2 to 3 year damper in that location for single family homes. So anyway, I'm not a single family home guy.
Seems like people start there, but I really don't know many people that stay there. It becomes
Right.
too difficult to scale, and there's too many headaches, and people end up becoming property managers. They don't want to let go of that. I never hear anybody paint a rosy picture about trying to scale single family flips or anything like that.
Yeah.
So.
I don't know there's anywhere you can go with it much. I mean, those are great assets.
Yeah.
And you know, and maybe my fear is unfounded, because but I suspect that those institutions will, you know, they tend to make big moves. They don't seem to be patient, and it's like, all right, we want to exit this position. We'll do that over the next 4 years. I don't think that's how they act. I think put 300 units on the market.
Yeah.
And it's it'll move a market.
Absolutely. So when you started first getting traction as a real estate investor, what simple marketing strategies and tactics kind of help you do that?
The only real traction I can credit as doing what I'm doing now began when I joined Raise Masters about 2 years ago. I listened to a Hunter Thompson podcast, and he was advertising Raise Masters on the front end of his podcast, and I'm like, Lord, that's exactly what I need. Because I've been in finance my entire career. I've had investment bankers and merchant houses as clients, and I've been on the deal side a great deal of my life, but I've never been on the capital raising side, and it is a specialty. And I knew that, but so from there, and you know, the most success I've had so far is in social posting, doing a little blogging, and just trying to get some awareness and attention out there. As you know, we're now trying to get out there and have a much better, more sophisticated presence, and we're taking that across the board to our blogging, to our content and websites and things like that. So we've had some success. I've had some random people respond to our stuff who have become investors of ours.
That's awesome.
And I mean, it's like, wow, that really worked. And I mean, considering how much money we put in, it was all just time. It wasn't much money.
Yeah.
So I out of our 24 investors today, 2 of those came from pure marketing efforts. The rest of them were my professional network from 35 years and friends of theirs.
Yeah. Well, what's funny about doing anything online with especially social media or content is I can remember blogging with this business of mine for 3 years before anything happened. Like I would talk to my wife and be like, is anything going to come out of this? Like email subscribers. And it was just crickets. Right. And then, you know, eventually something happened. I don't even remember what it was. Maybe somebody booked a call or something. But one thing I've learned over time is there's so many more people watching than you think. Right. And another way that you'll see that is with me, you know, like on Facebook, my personal page, big surprise, right? I'll post pictures of food or like events and travel, but nothing else. So I'll run into people, and a lot of times it's people I don't even really know. Like I'm like, I know they're a neighbor, but I don't really know this person. And they'll make a comment to me and I'll be like, what in the world? Oh, they're stalking me on Facebook, right? And it's like, people are always watching. So
yeah,
Anybody listening or watching, as a reminder, keep doing what you're doing with your content. It can take time, but people are watching, even if you don't notice. So, all right, I'm going to switch gears with you a little bit here.
Okay.
What would you say is the biggest mistake you've made in regards to marketing so far? Like, do you look back at anything and go, man, what was I thinking there?
Oh, that's a good one. I think one of the biggest mistakes I have made is trying to go too wide.
Yeah.
Because when I first started blogging and stuff like that about 3 years ago, I was trying to also promote my consulting side as well as real estate investing side. And so I would have a tax day, and I would have a capital raising day, and I would have, and I can't remember what the rest of, but Friday was just sort of a good news Friday. And now I've turned Friday posts into posts about this not-for-profit organization that I'm on the board of, and which is about human trafficking stuff that I work with. So I just make that about them. And but now it's just really all about real estate investing. So I think people didn't know what they were going to get, if they were watching at all.
Yeah.
And so I just think it was too all over the board, too all over the place. And so now I've tried to focus it down to educating people on the terminology of real estate investing. And we're actually going to start blogging about deals we never did and why. Because I'm probably underwriting, and I use that term loosely, doing an initial analysis on 5 to 6 deals a week.
Yeah.
And some of them we drill down on and go further, but most of them like, nope. And so we're going to blog about that and talk about, why this deal didn't work. So again, just trying to be more and more focused on what we're talking about. That may not be the biggest mistake that other people think of, maybe. But that's the one that comes to my mind.
Yeah, it's funny that you mentioned that. I was actually telling this story recently, but with what I'm doing, again, I started off super broad, right? And my whole goal is, totally different business. But I was like, hey, Carmen, my wife, hey, Carmen, I'm gonna support us working at home. How are you gonna do that? I don't know yet. That was always like the conversation. And through Upwork, I started doing like little bits of digital marketing for people, but I would do anything for money. You may say, I need an SEO person. I'd say, I'll learn it. It might take me 3 times longer, but I'll do it for the pay rate you want. I'll learn it. And people would hire me. So it was like on the job training, but I realized like, man, this is so broad. I'm probably a C- in all these areas because there's too many, right? There's too many. And like now we're so niche, and this is true with any business, right? It's so niche that you do the same thing over and over and over, you have a chance to get really, really good at it. So, I
think it's so important. Yeah. Because, I mean, I would have hired you to do our website, and you're so now focused, which is awesome, that you referred me to another great contractor, and we're very pleased all up and down. But I'm like you when I was looking for jobs as a young CP. Yeah. Hey, you want to do an insurance company? Don't know a thing about insurance company, but yeah, I'll do it.
We'll figure it out. Yeah.
Yeah. Give me a day.
Thank God the water doesn't get cut off, so very good stuff, man. All right. Here's another curveball for you. Get ready. Can you share a story from your real estate investing journey that you have not shared publicly before? It could be happy, sad, funny, whatever you want it to be.
Sure. This will be a funny one.
Okay.
Because most of the funny stories come from the property management side. So that's something else that we do as Harvard Grace is we don't really sub out management.
Okay.
Just 30 seconds on that. I think the property management model is broken.
Yep.
And that there's no margin in it, and therefore you don't find very many good managers out there. So I apologize to all the great managers, but I've never found you. and so you're welcome to contact me. So we do management ourselves.
Yeah.
And really as a loss leader value add. I mean, and when I say we, I mean me.
Yeah.
And because it's the best way to ensure that we're delivering on the pro forma that we sold to the investors. And so anyway, so there's a lot of funny stories that come out of property management. So this one's a little on the off color side, but anyway, going back to that first duplex that I bought. So there was a little lady in there. She was a Section 8 tenant, and she had lived there for 40 years when I bought it. So when I met her, she was 90 years old, and she passed away when she was 94. Anyway, I did all kinds of things to that house, really just for her. We redid all the plumbing supply lines and all the drain lines, and then shortly after I hired this plumber to do all new plumbing supply lines, she started calling me up saying, "There's a leak by the toilet." Okay, I get the plumbers out there. Hey, there's a leak by the toilet. They go out there, they can't find anything. So third time, I said, "I'm meeting you out there." She says there's leaks. Yeah, I'm pretty protective of my tenants and stuff like this, so I'm coming out there. So, anyway, they tested. We even put blue dye in the tank of the toilet and flushed it to see if blue water would come out on the floor. Nothing. There's nothing there. So we go through this round 2 or 3 more times. As it happens, her son was visiting and staying with her at the time. And her son is blind.
Oh, boy.
And so the plumber and I kind of look at each other. We were just bewildered. We kind of looked at each other, and light bulb goes off. And I said to my tenant, "Ma'am, could your son be missing the toilet when he's going into the restroom?" "Oh, no. It was, 93-year-old mom still protecting her little boy who was 60, and so sorry, it's a bit off color, but I have laughed about that for 20 years now. It's like, it's not a leak, the guy's peeing on the floor. So
We're putting in blue water, but there's golden water everywhere else.
well, the flooring around the toilet was dark, and I mean, you really couldn't.
Yep.
But we did know it smelled awfully bad, and we're just like, where's this coming from? And so, property management, you deal with people where they live.
Yeah.
And in residential management anyway. So, I made some good friends, but that's kind of another reason I lean towards self-storage and office and stuff like that. It's people tend to be a little crazy at home. So.
Yeah, absolutely. Man, that's a good story. I like that. I like that question because it brings out some very interesting.
Yeah, absolutely.
What piece of marketing advice would you give a newcomer to the capital raising game if somebody's like, "Hey, Stewart, this is what I want to do. Where should I begin?"
Good question. Depending on how new you are, but don't do what I did. Learn from other people like Jason. Learn from other people like Hunter Thompson. And if you can afford it, join Raise Masters, because the teachings in those modules are just top notch. And I have watched those modules 3 times in 2 years, and full disclosure, I'm probably going to re-up again for a 3rd year. Mm-hmm. It's just been that valuable to me, not just from the education, but from the connections and things like that, and follow these steps. But here's the most valuable thing that I have learned, and it's the book that we got, Who Not How. Do not try to do everything yourself.
Yeah.
Find people to do it. Capital raising is a marketing operation. I am just pat myself on the, I'm pretty good one-on-one with the investors.
Yeah.
Where I suck is filling that funnel to get them to have a conversation with me. And that is a profession, that is, there's a skill and people like Jason and know how to work it and fill that funnel. And you need to use the digital tools. It might cost you some money, but probably not as much as it will cost you with you trying to do all of this yourself. Obviously, if you have time to do it yourself, it's helpful to learn. But most of us come at things we have to make a living. And so it's going to cost you some. It's really not that expensive in the grand scheme of things. Have a great website, use digital tools to fill the funnel, and then use automations to educate and nurture them and to where they ultimately have a conversation with you. And that to me is the secret. And just what I told my board this week is just from my own poll, I've met about 24 guys through Raise Masters who have implemented these tools and have raised $1 billion collectively. It's just, to me, this isn't guesswork anymore. It's just work that needs to be done.
Yep. Yeah, it's great. Very, very good. All right, let me ask you. So we're recording this really funny, really educational show in January of 2023. What are you focused on for the rest of this year as you continue to grow this business?
Our primary focus for the first half of this year is expanding our investor network. At the same time, we are focused on increasing our deal flow. And 2023 is going to be a very different year than the 5 previous years. A lot of deals got done in 22 that were sort of already in the works, and so a lot of them fell out because of interest rates, but some of them got done just under the wire. So here we are in a new environment. We know that there's an awful lot of properties, commercial properties, that are going to have their 5-year balloon notes mature this year. It's likely going to happen for the next 3 years. Some of these guys aren't going to be able to refinance. So we are all networking with bankers and other lenders. Is it, hey, if your client's having trouble, give us a holler. I mean, because there's a situation where you might be able to pick up a deal at a pretty good price, and your tenant's already built in, because a lot of these things are owner-occupied deals that they can't refinance. And so we might be able to step in and pick up. I think it's a generational opportunity to build some wealth as these values will return back to more normal prices within a more stabilized economy. So that's what we're focused on.
Sounds good. Sounds like a good plan. Yeah, every time there's a dip or a recession or anything even remotely like that, there's always opportunity. So
always.
We all know a ton of people that become victims of the situation, right? Because all they do is complain about it. Don't do anything. And then there's other
the victim.
There's other people that say, hey, wait a minute here. If we prepare for it, we think ahead and we don't panic, there's actually some really good opportunities as well. So well said.
Well, and that's why you need to build your investor network too. So you don't have to be able to do it yourself, but your investors that are looking for the opportunities as well.
Oh yeah. Absolutely. So if anybody listening or watching would like to get more information from you and learn more about what you're doing, what's the best way for them to do so?
Best way for them to do so is to go to harvardgracecapital.com. You can get on our email list, find out about our current offerings. You can get a link to book some time with me. I would absolutely love to talk with anyone about real estate almost at any time. It's kind of an obsession, but that's the best place to get it. We're also on LinkedIn, and I'm told we're on Facebook, but I rarely go there. So,
all right. So.
But I mean, any of those normal places, but website's probably the best way.
Okay. Sounds great. Well, really appreciate having you on as always. Lots of laughs and lots of good information. So thank you for coming on.
You're a rock star, Jason. Thank you for having me.
Yeah, no problem. Thank you for listening to this episode of the show. I had a great time making it, and I hope you really enjoyed yourself listening to it. If you want to keep up with all things Real Estate Investor Marketing Stories podcast related, I encourage you strongly to go to reimarketingstories.com and signing up for our podcast newsletter. We will simply keep you up to date with what's going on at the show, new episodes, and things like that. reimarketingstories.com. So hopefully today's episode and the other episodes that you'll listen to will remind you that as a real estate investor, everybody starts at the beginning, okay? Our guest today and the other guests that you will hear on this show will share their real story, right? They'll tell you what worked, what didn't work. And I want you to remember one thing, if you remember nothing else today. It's possible for you too, okay? Never stop going and keep following your passion. Finally, today's show has been brought to you by capitalraisingautomations.com. If you're an active capital raiser and you are ready to learn the 3 areas that are holding you back from raising more capital, I strongly suggest you check out capitalraisingautomations.com. Check out our free 10-minute video there, and you let me know if it doesn't provide you value. I'm sure it will. All right, thanks again for listening to the show this week. Hope to see you next time. Take care.